By the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business.
The SVB Silicon Valley Bank collapse may be worse than we actually thought. Now, back on February 8th, Jim Cramer, who's the host of Mad Money, which is a special that comes on CNBC, had his top 10 performing stocks. So I'm just going to play this clip for you guys. And basically, just to summarize before we get into it, Jim Cramer, he's been on CNBC for decades now, it seems, and he does a lot of stock analysis, right? But in a lot of cases, he's actually very wrong when it comes to, the types of stocks that are actually going to perform well. And back on February 8th, a little over a month ago, he was campaigning and cheerleading Silicon Valley Bank. So I just wanted to play this, and then I'm going to react to it.
The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here with the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over.
All right, so I want to go back to a couple of things that he just mentioned, right? And so
mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here with the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's very
He says, I think the fears were not justified, right? So he's talking about the drop in the stock price of SVB in 2022, saying that, the fears of devaluation in the stock was unjustified.
Very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have
So basically what he just said is, being a banker to a lot of these, tech companies and venture capital firms has always been a good business. And so, the whole point I wanted to make with this clip is, we shouldn't be just blindly taking advice just because it's on CNBC or a major network. And as you can see, this clip did not age very well at all because a little over a month later, so this was on February 8th, and as we all know, on March 10th, Silicon Valley Bank was insolvent. So now Jim Cramer is literally saying that he's intrigued by these top performing stocks. So if you're someone who, tunes into CNBC Financial Network, or, you take a lot of this information at face value, you could be in a very bad situation because, he's pretty much, campaigning, cheerleading this stock. Less than a month later, the bank is completely insolvent. And so I just wanted to play this clip for you guys, and let me know what you think in the comment section down below. All right, so another article I wanted to go over, this is in Barron. So SVB Financial CEO Greg Becker sold $3.6 million in stock nearly 2 weeks ago. So it says SVB President and CEO Greg Becker sold 12,451 shares on February 27th for $3.6 million, an average price of $287.42. Now, let's just stop real quick because I do want to bring up what their current stock price is. All right, so as of Thursday, March 9th, so this is probably when they became insolvent, their last price was $106.04. So if we're looking at what the president and CEO actually sold his stock for February 27th, which was about 11 days before the bank collapse at $287. So he pretty much got out before the price completely collapsed. It also says that day he also acquired the same number of shares using stock options priced at $105.18 each, according to a form he filed with the Securities and Exchange Commission. The options exercise paired with the stock sale meant that Becker's stock ownership in SVB remained unchanged. Before Becker set up his latest trading plan, he last sold SVB stock on the open market more than a year ago on December 1st, 2021. In that transaction, his trust sold 12,500 shares for $8.7 million, an average price of $698.69. That same day, he also exercised options to acquire 12,500 shares. So a couple things just don't sit right about this whole SVB situation, right? You have the president and CEO of the company selling shares 10 days before the company became, or the bank became, insolvent, right? And then also, as I just pointed out, December 1st, 2021, when the stock price was actually at $698, he sold 12,500 shares. Now, as the president and CEO of a company, you know, you're probably going to have the most inside information when it comes to what's going on in the company. So it just sounds kind of fishy that, you know, a lot of this information just recently came to the light. And as a lot of you guys know from the video I did yesterday, they stated that on Wednesday of last week, that's when investors were informed that they needed to raise like $2 billion. You couple that with the fact that, for example, on CNBC, Jim Cramer was basically saying how this was probably one of the top 10 picks of 2023 in terms of, you know, stocks that, you know, had value or had upside. And then a month later, you know, the bank is completely insolvent. There's certain information that, you know, probably wasn't available to the public for people to make informed decisions. Now, I'm not sure what the outcome of this is going to be, but I think more information and details are going to come out over the next couple of days and weeks. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions down below. And until next time, take it easy and we'll talk to you soon. Peace.